Well, I think the first point is that if you look at the data, and I'm sure the data for April and May will probably also confirm this, but there is whether it's the hedge fund industry, whether it's the long only industry, the active managers have not performed well over the last 2 to 3 months relative to passive indices. Now, to come back to your question of what is the optimal investment at the moment, if you look at investor surveys, and there was actually a very good survey that came out recently from Bank of America Merrill Lynch on investor positioning, and investors are still super cautious. They're sitting on very big positions in cash, in addition in government bonds, whether it be bunds or treasuries, but certainly core government bonds. And then there is also quite a lot of hedging of investment risk by long positions in the gold market. And, we haven't talked about gold, but clearly, with gold, currently trading close to 1750, we have seen very strong demand for gold as a hedge in case, we get further bad news on the coronavirus. Now, in equity markets, clearly, we've seen, I think, just two themes. The first theme is that we've seen quite a strong rally since the third week of March, and virtually all equity indices around the world having fallen dramatically from late February until really the third week of March are now up quite strongly. For the next 2 to 3 months, I actually think that rally, which has been fueled by the extent of monetary and fiscal expansion, probably will start to fail. And I don't think that investors should be chasing that rally. Now, between sectors, we've clearly got very major winners and losers. You mentioned Mike O'Leary at Ryanair earlier in the program, and clearly the travel industry and the airline industry is under severe pressure and is likely to remain under severe pressure for some time. Likewise, the leisure industry. I think certain areas of the real estate market are going to be pressurized. Steve was earlier talking about the problems in the retail sector. I don't think that's going to go away. If you look at who the winners are, from what's going on at the moment, and I think this is not just a short-term trend, I think it's a longer-term trend. It's the IT sector, it's the telecom sector, it's the logistics sector of people ordering stuff and having it delivered rather than actually going out and buying retail goods. And then it's obviously consumer staples versus consumer discretionary. Consumer staples numbers are actually looking very good.